Hi everyone, and welcome back to the last episode of this year, our Christmas version.
Yes.
Yeah, I was supposed to bring a little Christmas tree, but I couldn't find it.
We'll keep it neutral.
Keep the Christmas tree.
But it is indeed Christmas in tomorrow.
Day after tomorrow would be Christmas Day.
Yeah.
Yeah. But before we start thinking about Christmas too much, let's talk about dairy.
Yep.
So, still a lot of milk within Europe.
Yes.
Is that expected to continue?
So far it has, because all the weekly reports, even though they're not official, still indicate a really strong milk production growth, and the farmgate milk price dropped and kept dropping, although it's still a game theory between corporations, as we discussed in one of the previous episodes.
Yeah, because are we at break-even level?
Nah, almost there.
Close.
I spoke with some farmers that were getting kind of worried, sort of. As hey, we're really approaching the break-even price. Will it go down even further? And I think it should come down even further, because when you calculate it in commodity milk value, it still
doesn't calculate. Yeah.
No. So it still should come down, and but so far it's still slightly profitable to produce, and people are producing a lot of milk. The weekly reports for Germany were above 7% growth year over year. Okay. Also because the comparable is still weak. And the first few months of 2025 were also weak, so they are beatable.
Okay, and so does that mean we're not seeing, a lot of cows being slaughtered? Because we said the meat prices were still good. If milk prices come down, farmers might change their
you see a little bit of change in the US, for example, because they publish those weekly slaughter reports, and their slaughter has increased compared to last year, but also month over month it's getting stronger, because they have seen weak slaughter for 2 years. And it depends a little bit on which region you're looking at. In the West, not so much, but in others, yes. And the US is interesting because they published their November milk production report. 4.5% growth, milk production. Solids even stronger, close to 6%, which is really strong.
Wow.
But people are getting used to those numbers, as their October report, September, August, all were strong. It doesn't necessarily translate into skim milk powder production, though, or non-fat. Especially the skim milk powder production is on the lower end of the spectrum, and it has been the case for a while now, because yes, California will definitely outpace last year, as they were infested with bird flu. But you see within the US that a lot of the extra milk is also flowing towards the new facilities.
Cheese facilities.
Facilities, people into high whey protein stuff, all that kind of stuff.
Better value than skim milk powder.
Yeah. So, that's the new ones.
Yeah. And then if we look at New Zealand, because Europe is doing well, the US is doing well, New Zealand?
Still doing well. Yep.
Okay.
They too published a positive milk production report. It's most of their months were all around 2.5% milk growth, and then adding a little bit for stronger milk solids. Their milk price came down as well, similar to, for example, Europe. But their exports are kind of weak. For example, when you look at skim milk powder. Europe had a pretty strong market share, close to 40% of total, exports. Because they were competitive on price, but New Zealand wasn't, so their exports were struggling a little bit while their milk production was really strong. But now they've come closer to Europe, so let's wait and see for the new year.
Yeah. So wait and see what the milk price is, what happens there, and what happens to the exports from New Zealand.
Yeah.
Okay, interesting. And what's going on with China? We heard something about tariffs.
Yeah, tariffs. Yeah. They are retaliation tariffs for our, as in Europe's EV tariffs. And it depends a little bit on the product, because, for example, China doesn't import that many powders anymore. So S&P, it's only a few percent of the whole exports, European exports, goes to China. I believe it's close to 3% or something like that. Whole milk powder also limited. But for example, cheese, butter, it's 9% of European exports that are going to China, and they need to find another route or destination. And cream, also interesting. Cheese, whey as well, but not too sure if whey is in the calculation, because China needs whey. And the incentive for China to put it on dairy is also there, because China itself is still a bit oversupplied. When you look at, for example, their milk production and their, whole dairy complex.
Yeah, and in general, globally, if we look at the skim milk powder demand, I mean, we said production's really good. How's the demand doing?
I would call it fair. It's not as strong as a few years ago, but that was a really strong COVID peak. It's not as weak as about a year ago. It depends a little bit on the region. Mexico is still not the greatest. China has lower demand. Their November import number was a few kilotons, 2 kilotons lower than last year, while they were already weak. As said, they are a bit oversupplied in that sense, perhaps for skimmed. But there are regions that are definitely seeing some growth: Southeast Asia, Middle East, North
so
Africa.
Overall it's decent.
Overall it's decent.
Yeah. Okay. And then, we want to move to the fat side.
Yeah.
But should I give you the word or should I give a word to our guest?
Yeah, greatly appreciated colleague.
Definitely. So would you like to introduce him?
Yeah, of course. It's Joris Thys, and he's a trader for butter. And butter is an interesting topic because it has been one of the most volatile products in the whole dairy game last year and even 2024, because the whole rally up started in 2024 and then it came crashing down this year. So we figured, hey, that's an interesting product.
Let's get our expert in.
Yep.
Thank you, Sanne, for inviting me. It's been a long-term dream of mine to be part of the podcast, and especially in these last days of the year. I'm Joris. I'm responsible within Hoogwecht for our European butter positions. I'm also responsible for the derivatives trading on the EX exchanges.
Well, thank you. I mean, it's great to have you here because a lot has been going on the butter side. A year ago, we saw a very bullish market. It's completely the other way around right now. Can you explain a little bit about what's going on in the market?
Yeah, indeed. If I would have been sitting here last year, everybody would be extremely bullish because we were at prices at 8,000 euros per ton. And prices sustained quite high actually throughout the first half of last year. Mainly driven by very tight supply and demand situations. Somewhere around start of June, July, August, the market started to turn, and then we had this complete sell-off, where now we are with butter prices around, today for Q1 we are trading around 42.50. So really big dramatic swings. And what has happened, of course, is with these very high prices, it did some demand destruction. So we see overall less demand than we previously saw. On the other hand, of course, we see everywhere in the world, as Jürgen was talking about earlier, we see very good milk production also inside of Europe. We had no real negative surprises this year. We didn't have blue tongue. We didn't have a very hot summer, which was just normal. And that meant that there was plenty of milk available. And that resulted in more fat in the world. And in the end, the fundamentals caught up with the very tight scenario of the year earlier. We see overall in Europe very good stocks, and that pressures prices at the moment.
Yeah, and so I mean, good stocks, still good milk production. Okay, demand a bit lower than what it was, but do you expect prices to go down further?
I mean, it's always very difficult to call the exact bottom in a market. If we look at it on a historical level, we start to be, not really at the lower end, but I mean, we are at a relatively low pricing point. And it also depends on your historical horizon, right? If you would, to see these prices, you have to move back towards 22 and even earlier to have reference points. And if I would have told anyone that early last year, nobody would have expected it. So, I mean, you can also say then where high prices were doing what high prices do, increase production, reduce demand. One could argue that these low prices will also do what low prices do. That means decrease production and increase demand. Especially on the milk supply side, we see overall in Europe payout prices towards farmers being reduced by the different co-ops. The current expectations is that this will continue at least for for the start of next year. And then we start to approach at the break-even point where farmers might perhaps choose to sell the cows for meat production. That could then have kind of a bottom in the milk production, and then later on have an impact on how much butter there is available. That being said, stocks are extremely high in Europe, and we've seen kind of a counter-seasonal pattern over the last few months. So we will have to eat first our existing stocks before prices can really recover, I think. So we might see, and it's always difficult to have a price prediction, but we might see a bit more of a sideways scenario before the prices really move towards the next big move.
Okay, and I mean, if we compare the butter market, butter prices to skimmed prices, skimmed has also come off, but more slowly. Is there a reason why you think butter is so much more volatile than skimmed?
I think the main reason actually is that skimmed, in my opinion, is more of a global product where you have typically the three origins: New Zealand, US, and Europe competing for the same type of demand. While on the butter market, still it is a lot more a local market. We do see some arbitrage, like this year we saw for the first time, or a very rare occasion, to see the get quotas fully full. So there are some dynamics, but mainly Europe is a market on its own, and exports are relatively limited. So there is less competition, and I think that has more of an impact. Also, I think that one of the reasons is, or another reason is that over the last years you really saw an increase of the ratio fat compared to protein, and that resulted in very high fat prices, while the rally on the skimmed was way less than on the butter. And now you kind of see the opposite. You see again that the proteins are appreciating compared to the fat. Has a lot to do with all the evolutions in the US, where people are eating more protein due to the Ozempic. And that might actually be something that we see prolonged in the market. I mean, I think if I remember correctly already, 1 out of 5 people in the US is consuming these type of products. But now prices are being reduced as well. So you might even see more of demand on the protein side. So it makes it a very interesting market at the moment.
Yeah, interesting. Well, a couple things to watch there for sure. What we usually do is we end our episodes with, a bulls and a bear. So if you would like to say something about, reason why prices might move up on butter and reasons why they might move down, the main things that you'd like to highlight?
Yeah, I mean, in Europe, obviously, we still have the risk of the global warming, I would say. So I always think that there's a risk of a very hot and dry summer, which could have an impact on the availability of the milk. And as I mentioned already earlier, the overall reduction in the price. But so that the one is quite kind of a bullish, and the other one is actually quite negative.
Yeah, no, that works. Is there something you would recommend our viewers?
Well, I mean, I think, especially if you are a purchaser, I would suggest don't try to call the bottom. Having the exact bottom is a very difficult task, as is for producers to sell at exactly the top. In my experience, the better purchasers or the better salespeople are the ones who have kind of a strategy where they where they gradually get rid of their risk. Like if you've been buying butter at 7,000 last year, I think 4,250 is a great buy for at least part of your consumption. And then if market prices move lower, scale in. And if prices move higher, hey, at least you've hedged part of your consumption.
Well, I think that's great advice. Let's end it like that. Well, thanks for watching, everyone. We wish you a lovely holiday period, and we'll see you in 2026.
Happy New Year.